Welcome back. Mortgage rates are at record lows, but these rates may not last forever. I spoke with local financial professional Mike Kojonen tonight. He shared what you need to know before buying or refinancing. So a lot of people buying up homes in the Twin Cities over the past year. There are a lot of factors to that, but certainly low interest rates don't hurt that.
Right.
What's the latest and how long is this going to last?
Well, I wish, like a lot of my clients who bought homes in the 80s and the interest rates were 12 to 24%, they would love these rates today. But a lot of them, their houses are paid off. But, there's a lot of different factors. The market conditions, or the type of loan you're getting, how big of a loan, your credit history. I've seen from just one lender to the other, Aaron, that rates could be 0.75% different from 130-year at one lender to another lender. So you have to check around with that. But we're anticipating these rates staying about where they are for the next, probably this quarter, maybe second quarter as well. A lot of people are speculating because of trying to improve the economy that rates were going to be increasing here as early as midsummer.
Okay, for first-time home buyers or people who aren't familiar with this scene, are there any, like catches you have to look out for? Any red flags that for sure would set you off?
Well, the key is, you have to go with a reputable lender. You have to get that pre-qualification letter. Don't be out house shopping and wasting the realtor's time when you actually haven't got a true pre-qualification. I think that's the biggest frustration in this industry. As you go down, a month, 2 months deep into it, you put an offer on, you find out you don't get it approved. So the key is, when you get with that lender, is find out how much you can afford. Get that budget done. Right now, you have to find out what is that debt-to-income ratio on your house. The typical rule of thumb is 28%. So they don't want your house mortgage to be roughly right around 28% of your total income. So if you make $7,500 a month, that means your house payment should be right around $2,100 a month. But that includes your principal, your interest, your taxes, your insurance, private mortgage insurance, maybe homeowners association dues as well. So all of that comes into play as well, but that's not everything, because you might be crazy with credit card debts and student loans and car payments, and your total ratio is just way overblown, so that might not work anyways. But so you got to find out what you can afford first of all.
Mm-hmm. At the same time, you say that mortgages are kind of hard to come by these days. Tell us why that is.
Yeah, I think because what happened last year, the pandemic, some people got temporary wage loss, or lost their job, or maybe they took credit dings during this pandemic when their income was a little bit lower. So because of that, a lot of the lenders, not everybody, but yet that's another reason why you want to shop around as well. Some lenders have risen the standards up. So they said now you have to have a minimum 680 credit score, or maybe a minimum 700 credit score just to work with that lender. Some of them are requiring a higher equity position in the house. So maybe you could get down with a 5% down payment on the house, but now you need to have 10 or 20%. So check around per lender as well to find out which is going to be best for you.
Mm-hmm. So across the board, you're seeing a lower tolerance for risk.
Right now, yeah, they can handpick right now. They're handpicking who they want to work with. They don't want to take big risks right now. They don't want to be in a position where the market was 14, 15 years ago during the real estate bubble and with the mortgage crisis, and be stuck with a bunch of foreclosed homes. So they want to be tighter with these guidelines, especially what happened last year.
Mm-hmm. Okay, let's talk about refinancing. Is this an attractive time for homeowners to do that?
Yeah, if it makes sense. So there's really kind of three reasons to look at. One, can you save money? So the typical rule of thumb is, are you going to drop at least 1 percentage point? If you're sticking with the same length of term on your mortgage, from a 30 to a 30, are you going to drop at least 1%?
Does it always reduce your monthly payment when you refinance?
No. Some people are just looking to shorten the mortgage term. So you might have a 30 and you're just looking to go to maybe a 20 or to a 15. Sometimes you can do that without really changing your payment. You might be 4 or 5 years into a 30-year mortgage and you're dropping maybe 2% now. And you could actually cut 6 years, or maybe go to a 15 and cut like 11 years off of it. Maybe you have a slight increase in your payment, and that's worth it. You got to look at the long-term goal to free up your big mortgage payment so you can actually, max fund your retirement accounts, and you can enter retirement without having that debt. That's huge.
When we talk about, maybe these interest rates are going to be changing as soon as in a matter of months, I think that may cause some people to speed up their search, but I'm sure that you would caution against rushing into something like a mortgage.
Yeah, just double check it. You don't have to just be pressured to do it. And first of all, I know the process is a little slow right now because what's going on right now is people are working out of their homes. A lot of these mortgage people are bombarded and they don't have access, to in the office, or banks are running full staff as they used to. So the process is taking slower. So don't feel pressure to do anything. The key is you got to make sure it fits your situation and how long are you going to be in the house. If you're going to be selling your house in the next 2 or 3 years anyways, it most likely won't make sense to refinance. Obviously, if you're looking to buy, we know the housing market is hard to find a house. It gets listed. If it's anything within reason, it's gone, usually within a week or two. So yeah, definitely don't rush in anything. And that's with anything in life. You just don't rush to make a decision.
You will find more money advice from Mike on WCCO.com.